Hey everyone, thanks for joining this market update. This is being recorded as December 7th, and just want to take a look at just what's been going on in the market, give you guys an understanding of everything going on, obviously keep you informed. We didn't get around to doing this in November, so this one is a little bit late, but November has a lot to talk about, so that makes positive things to talk about, which is nice. So who is Selah? Selah was founded in 2019 with the goal of bringing confidence organization to people's financial life through education, stewardship, and empowering wise decision making. Holistic wealth management and planning firm located in California, but serving clients nationwide. So if you have more questions after this call, at the very end, there's going to be a screen that kind of gives you other ways to contact me if you have any further questions about any of the content we've gone over, or just for yourself and your planning. Please don't hesitate to reach out and let me know. But let's get into it. So this is what we're going over today. It's going to be probably a quicker video than last couple months. Again, positive things to talk about, which makes it a little bit easier. But so we're going to do a quick look. That's where we always start, just where we are, where the market is for year to date. Kind of some what's next information as far as what are some other things that we're looking at now after that rally in November. What are we looking at moving forward? And then we're going to talk about a Santa Claus rally and what that means, seasonality, is that coming? And then just the presidential cycle and what that could mean for this bull market. So that is what we're going over today. So here's the quick look. Like I said, this is as of last Friday. So that makes it December 1st. This week in the market, it's been pretty back and forth. So it's going to be pretty close to these numbers, not going to be too far off. But you see that the S&P has had a year-to-date gain of 21.49% right here. And the NASDAQ, year-to-date gain of 37.77% as of last Friday. You see a nice big 1 month really across the board in each of these indexes. And then you look down here and you're like, okay, so what are the sectors that have done well? Same ones we've been talking about most of the year. You have information technology now hitting 52.28% on the year. And communication services, sorry for that typo right there. Here's the number right here, 48.32%. That was last month's. That did not get updated. So again, just to reiterate, and I've said it in previous market updates, but if you haven't listened, the NASDAQ is heavy tech, which is why you see such a large number there on the year. And so you see information technology here has done really well this year. And then specifically lately has had a very large rally due to AI. And so that is where you're getting those higher numbers there. The nice thing on this quick look, finally, I feel like, is that you finally have the Dow catching up, or at least waking up on the year. That has been relatively flat. If we look back at past quick looks for 2023, and you finally see some movement there, which is nice to see that the full market is starting to catch up. And that's what we're going to look at a little bit later. Maybe it's the next screen actually, but it's more across the board. For a little while we were just getting tech and a few different sectors, which is why most of the gains have been in the S&P or in the NASDAQ, but now you see the Dow has starting to move, which means that we have more sectors getting involved here in these positive gains. So that is positive news overall. So here's kind of what I was talking about, this next slide of looking at what's next. So right now we have the S&P is sitting pretty much at those July highs, which means it's providing some resistance. So when you look at stocks, when people analyze stocks, you have fundamental analysis and you have technical analysis. Fundamental analysis means you're looking at the balance sheets, you're looking at year-over-year growth, you're looking at their numbers from them. Technical analysis is looking at the charts. So this is what this is here, is we're looking at the charts and just the patterns in the chart. The high of July in the S&P 500 automatically is now a resistance to the S&P, meaning it's kind of like a barrier that we're either going to bounce off of it and go back down, or if we can break through it, it becomes a pretty bullish signal for the market. And the reason that is just because when you reach that high and then it kind of, the market kind of peters out and goes back down and kind of does the stuff down here before it goes back up to that high, again, it just provides that resistance against it, of showing that was the last high. Can we make a new high? And once it closes, it has to close. You can have, it will go, it might touch above it during intraday trading. But if you get a close above that 4,600 level for the S&P, then we have broken through resistance, and that would be a very bullish signal, meaning that we think the market's going to keep going up from there, and we'll set a new high. Once we do that, then that resistance actually now becomes support, and so you might see that as the market's volatile, once we break through that market, reach a new high, come back down, that level becomes support for it to bounce back off, before going back up again. So that's kind of how technical analysis work, and that's what this is showing you. And you've seen that actually all this week. We're just kind of, in this circular motion right below that 4,600 level. I think today I saw, it was like, before getting on this call, it was like 45.84 or somewhere in that range. So I've just seen us right basically at that range of resistance. So that's what we're watching. We're watching for that breakthrough of that previous high. This here is something called an advanced decline line, which is a formula that is used to show how many stocks on the market are going down versus going up. So it has this formula behind it. But when you see these big increases, that is showing you that more stocks are going up than stocks are going down. So like sometimes in the market, maybe the market's up, but it's only a few companies that are really pulling a lot of the market up, especially if those companies have large capitalization. So they're very large companies and they can kind of drag the market up because they have such big highs. Market breadth is it's across the board. Are you seeing green across the board in multiple companies and multiple sectors? And we're finally, like I said, getting that. We finally got that in November. So that shows a lot more overall health in the latest rally in November. So that is a good thing. But same, you're seeing a resistance line here in this chart, matching this resistance line here. So again, looking through that breakthrough of that resistance. But this is a very good sign for just overall health in that latest rally in November. So it then goes into, okay, so the Santa Claus rally, what does that mean? What is the seasonality around December? So you can see in this chart here, this is kind of showing you every single month and the percentage of positive monthly returns in those months in this chart dating back to 1950. The best month on this chart is December. So December has the highest proportion of positive monthly returns, which 74% since 1950. So that's Santa Claus rally. But something to note is that the stronger returns in December are normally delivered. They normally happen in the second half of the month, not the first half of the month. And so, that's kind of what we're watching. Will we get a Santa Claus rally this year? Because if you look at this chart on this next page, we actually have not gotten that in recent years. And so, it's like, will we get that this year? I'm not really sure, because in the past 5 years, in December, we have had negative returns, and also the past 10 years. So, December hasn't been a great month for us. A lot of this is drawn down because I think it was 2018 December had like a 9% drop that year and closed at a low, so that is dragging that down quite a bit from 2018. But December's haven't been great recently, so we're not, that hasn't been a guarantee in that Santa Claus rally. So we're waiting to see. You can see in this chart here, though, that November is a very strong month also in the last 5 years, and that was true again this year. With this November, we had a 9% gain, and this November ranks 18th best overall month, period, since 1950, and the 4th best month in the past 10 years. So rally last month was a very nice rally, and definitely, hit some kind of higher historical numbers than even what we have been getting in Novembers, but we've had some pretty strong Novembers, especially as of recently. So then it goes into looking into, okay, so seasonality, we'll see about that Santa Claus rally. Maybe we got it all in November. We'll see. But then looking to 2024, the biggest question that I'm getting from clients is, what about the election year? What's going to happen this election year? What does that mean for stocks? I think this chart was helpful because it shows you that here's year one. So this is the S&P 500 index returns based on the 4-year presidential cycle. You have year 1, year 2, year 3, and year 4. So your reelected president in year 1, year 2, year 3, year 4, your new president in each of those years, and the average year between the two. Okay, so here's looking at year 4. That's what we're going into. We're going to year 4 of a presidential cycle, which is always an election year. Regardless of who has been in the White House or who will be in the White House in 2025, the year 4 of an election cycle has brought an average of a 7% gain in that year 4 during the election year. Now that is a big drop off from year 3 when you have an average of almost 17% gain, but this is not normally negative. This is still normally positive. And so, maybe that can help kind of calm some fears that this election season is going to completely derail the bull market. While election seasons are more volatile, that part we won't be able to get around. Hopefully we still have a gain on the year, and that historically that has shown us that's where we've been. Now, I do think that the market is looking at more than just the election year. There are just more things in focus, and you know what those are because we've been talking about them. So the recession and inflation and interest rates still being the main thing. But you know, the presidential cycle will play an effect on that. And then we're going to keep discussing this as the year unfolds because there's actually a lot of really interesting data surrounding the market and when the market's down and who's normally elected, or if the market's up at a certain time, who's normally elected. So we'll kind of continue to discuss that information. And again, it's all just information that the market has. It doesn't necessarily mean, you know, what will happen, but it's kind of interesting to talk about and see. And then just a couple of year-end reminders for you as we're closing in on 2023, the end of 2023. These are things that have to be done in 2023 for your taxes, and you know, just before a year end. So if you wanted to do any Roth conversions, if there was a time that made sense for you to do a proportion convert from your Roth to from a traditional IRA or 401k into a Roth, that needs to be done. If you want it for 2023, that would need to be done before year end for your taxes. So that would be something to consider. Tax loss harvesting for offsetting any capital gains that you may have would need to be done before the end of 2023. And you can claim up to $3,000 of losses, but you can use any of those losses to offset any gains you may already have if you have some funds that are still not doing great in your portfolio. Obviously, year-end charitable giving, that one, most people know that's an obvious one. If you have an HSA, finishing your contributions to your HSA and maxing that out, maxing out your 401k, any annual gifting. This is not charitable giving. This is annual gifting as like wealth transfer gifting. So if you're gifting to a beneficiary, for like inheritance that you want to, you can do up to $17,000 per individual, per person. So as a spouse, you can do 17, your spouse can do 17 per each individual, without incurring gift tax. So if you are in the wealth transfer stage, that's something to consider. And then, RMD, not something to consider, something to make sure you did. If you are required to take a distribution from your, retirement accounts, if you're at that age, you need to make sure you took your full distribution so you don't get penalized. So those are just your year-end reminders of things to maybe check through and see if these need to be done or make sense for you to do before the year is over. So that's all I have for you today. Like I said, a little shorter, sweeter, better news to talk about. So makes it nice. Here's some information about LPL. And here is some more disclosures from LPL. And then, like I said, here's this page. If you need to contact me, or have any questions or just other ways to continue to stay educated and involved, with Selah. And if you are listening to this on the podcast, I will make sure to put this presentation so you can see all those charts, as you're listening. Those will be in there. And, thank you so much. And we will see you guys next time.